Welcome back to the second session of the day, which will be dealing by CA Parsa Kiran sir on standards on auditing. I now request the session speaker to please come to the stage. I request right side of the branch, Ami and to please hand over a book to the session speaker. I also call Ali to learn the photo. Before moving to the technical session, I just want to introduce the formality of the formal introduction of the today's resource person, Kiran Parsa, MCom, LLB, IP, FC and DISA. He is a distinguished chartered accountant with over 18 years of post-qualification experience, having qualified as chartered accountant in the year January 2008, and attained fellowship of the Institute of Chartered Accountants of India in 2013, senior engagement partner at MG Rao Associates Hyderabad, where he leads a team of audit professionals handling a diverse portfolio of clients across sectors. Possesses extensive expertise spanning audit and assurance, secretarial compliance, finalization of accounts, GST, resolution matters under IBC, systems audit and social audit. He is a registered insolvency professional with the Insolvency and Bankruptcy Board of India and a member of the Institute of Social Auditors of India. An accomplished academician, he has been visiting faculty for chartered accountancy aspirants across all levels at SIRC of ICA, Hyderabad and other premier institutes. Brings rich experience in statutory audit of power generation companies, IT and ITUs companies and bank audits across central statutory, branch statutory, concurrent and LFAR formats. He is empaneled as a peer reviewer with peer review board of ICA, technical reviewer with the quality review board of ICA and a technical reviewer with the financial reporting review board of ICA. His professional experience is his engagement partner at MG Rao Associates Hyderabad from 2008 to present. Manages a team of 25 audit associates overseeing the financial audit process for multiple clients. Performs financial audits including central statutory audits of banks, statutory audit of banks. Collaborates with clients to identify financial risks, leading to a significant reduction in the financial sectors. His core competences are statutory audit of banks and listed entities, bank audit central, branch and concurrent, audit of power generation companies, financial analysis and reporting, systems audit, social audit, peer review, technical review, team leadership and mentoring, anti-money laundering compliance, concurrent audit of branch, forensic accounting and fraud detection, GST advisory and compliance. A visiting faculty for SCRC of ICA, Hyderabad and premier institutes. He is an author of textbooks for CA Final and CA Inter on Auditing and Assurance, author of textbooks of CA Inter on Strategic Management. The education qualifications 2023 Social Auditor Examination he got qualified. In 2022, he qualified Diploma in Information Systems and Audit. In 2018, he qualified Insolvency Professional Examination. 2008, he is a Chartered Accountant. He got qualified as Chartered Accountant. 2002, he completed his Bachelor of Law. 1996, he completed his Master of Commerce. 1994, he completed his Bachelor of Commerce. The Associate Member from 2008. 2013, he is a Fellow Member of Institute of Chartered Accountants of India. From 2018, he is registered as Insolvency Professional, Insolvency and Bankruptcy Board of India. From 2023, he is a member Institute of Social Auditors of India. From 2024, enrolled as an independent director with IICA. His post qualifications are and certifications are as follows: certified in forensic accounting and fraud detection, concurrent audit of banks, public finance and government accounting, forex and treasury management, non-banking finance companies, non-profit organizations, Indian accounting standards, cooperative societies, anti-money laundering law, artificial intelligence for CAs, and DISA. Will be brief introduction of the
First of all, respected senior members and my colleagues, I am very happy to share my views. Thank you for giving this opportunity to our managing committee of our Hyderabad. Now, without wasting your valuable time, we'll go to our, of course, our friend has given a big list, but my core area is only just I will use this. My core areas of practice is mainly advising our fraternity mainly on audit documentation, peer review and quality review, and for bigger firms if they have been invited by any NFRA etc. So that during the inspection, and even now I am supporting the members who are facing any disciplinary whatever the notices. These are my core areas. Okay, so that my day-to-day practice is right from beginning is also only peer review, quality review, NFRA reviews, documentation, and audit related issues only. Okay, rather than what you are doing day-to-day, that I am not doing. Okay, in those areas I am very weak. In this area is my area. Now, today we will discuss mainly, my intention is from practice point of view. Generally, what are the normal mistakes that we are doing as a practicing CA? Most important one in our audit report. First we will discuss, that is day-to-day our main practice. And what are the general contents, what are the significant changes, when to report, where to report a particular one. Because how much we are audited, that is secondary one, whether it is 1 month, 2 months, 3 months, whatever it is. Ultimately, our audit is reflected in our audit report only. Any mistakes we done in the audit report, that indicating we did not audit it properly. And in fact, whatever the evidence that we are gathered, whatever the conclusions we draw, ultimately that is also reflected in the audit report only. So that no doubt our entire audit process is reflected in our audit report. Hence, no doubt that is the core one. First, we will focus on the audit report. What are the areas where we generally commit mistakes? Of course, with the due respect, the senior members might be know the more than me, etc., etc. In that cases, we will exchange the awareness. Next, first of all, just I want to clarify. You know all. Now, entire standards issued by the institute, we call it is engagement and quality standards. It is not a single standards on auditing, is only one part. The entire standards issued by the institute, we call it is engagement and quality standards. These are generally 5. Standards on auditing, standards on review engagement, SRE, standards on assurance engagement, SAE, standards on related services, SRS, then mother standard, SQC. With reference to SQC, which we call it is mother standard, SQC 1 number. The institute is considered SQC is mother standard because compliance with the SQC is completely interrelated with all other standards. If we compare with SQC, then we are compared with more or less all standards. And so nowadays NFRA is also issuing to the bigger firms notice, we are going to be reviewing your firm whether you are complying with SQC policy, simple one. Whether your SQC policy or complying with or not, only one notice. Because that covers the entire. So how you are it with reference to this whatever with reference to the firm, they are asking only one thing, whether you are complying with your SQC. In fact, with reference to SQC, our institute has been issued another 2 standards, SQM 1, SQM 2, which is supposed to be implemented from 1st April 2026. But however, those standards, generally standards on auditing according to our Companies Act, is issued by the central government. Similar to the accounting standard, on the before 1956 Companies Act does not recognize our standards on auditing. Whereas 2013 Companies Act has been recognized. According to 2013 Companies Act, now standards on auditing are issued by the central government based on recommendation of ICA. ICA is not issued. Only we are making recommendation. It is issued in the name of the central government only. In confirmation with the NFRA. Just we dropped, NFRA will be consulted, then officially issued by the central government. Whereas this SQM 1, SQM 2 were issued by our institute. It is purely for our internal practice, hence we need not be issued by central government. Like this one, it was issued by central government. NFRA objected. Hence, the applicability of SQM1, SQM2 was deferred. Till date is not announced. So that hence now present what I want to convey is presently SQC is only applicable. If anyone have knowledge that SQM is not applicable, that is different. Only we are discussing about SQC, Standard on Quality Control. This is a mother standard which is interlinked with all other standards. The SQC also we will discuss at last. Mainly, now presently, once you completed one audit, particularly if it is a listed company, not less than 55 audit documents we have to be generated. But really, as we are preparing those many audit documentation, and of course, I know practically, off the record, generally we charge some fee from the client, whatever it is. According to our SQC only, once you charge the fee, ignore the same. Quality and fee should not be linked. You should maintain the quality irrespective of the fee being charged. But even ignore about the listed company, even a small private company having losses or 1 crore paid up capital or 1 lakh paid up capital also. Minimum not less than 30 to 35 audit documents we have to be generated. 35 audit documents are we are really generating? That is the first question. And what SQC is saying? You have to be assemble your working papers within the 60 days from the date of audit report. Sign it down. So within 60 days you have to be archive all the documents. So close. So generally NFRA is also asking that question only. Okay, whether you are everything it is part of SQC policy. Recently one of the big firm has been invited by the NFRA. Then I supported. First the question is what? How you can conclude that this document is generated on that day only? Generally they will select the some companies you audited in 2022-23. So backdated documentation, how you can prove that it is not documented? Then generally in the mail record etc. If digitalized, then evidence is more. If it is not digitalized, time stamping will be there. If not digitalized, then we have to be prove more. As long as if it is digitalized, yes, time stamping will be there. Otherwise difficult. First of all, these many documents does be required to be generated. Yes, because all standards on auditing have been issued. 55 auditing standards. So out of this one, we are going to discuss today some most important standards. First one, as I said, core essential is auditing. First we will discuss audit report, what are the contents of audit report. Mainly, when we are going to be including EOM, emphasis of matter thereof. When we have to be including KAM, key audit matter thereof. When we are include, what we have to be including the OM, other matter thereof. And most important, frequently facing one small problem, more or less everyone in our day-to-day audits, particularly even small private company also, going concern. Going concern is very common phenomenon, particularly post-COVID. Going concern means what? Simple company running in the losses. Whether it is running in the loss or profit, immaterial for us. Our duty is only to report whether it is showing the true and fair value of its state of affairs. But still, there is a clear element, going concern, our duty, SA 570 is there, we have to be reviewed. Because if the company is not a going concern, it is going to be what called liquidated within the 6 months, then financial statement should not be prepared in accordance with the accrual basis. It have to be prepared based on liquidation. That is the essential, because if liquidation means what, everything is on cash basis. But we are, entire accounting is prepared based on the going accrual basis. Hence, going concern is one of the important assumptions that we should be reviewing. I will use some 3 situations. 1, company running in the losses, purely negative net worth. However, one of the promoter has given assurance, having pump some money. I will give some money. And the banker is also agreed. Okay, they have providing some security. Hence, there is a possibility of revival of the company. The same point they disclosed in the notes. Company running in the losses. However, promoters are agreed to further subscribe to the share capital, whatever it is. Situation 1. Situation 2. The company running in the losses. Presently, there is no guarantee, no certainty of inflow of cash. They are trying, they are approaching the bank is saying that okay, but no guarantee, no certainty whether the money will be flowing to the same. If some funds have been raised, then there is a possibility of revival. The same they disclosed. The same disclosed. Yes, company running in the losses, we are in arrangement with the bank to procure the money funds, but however, no guarantee, no certainty so far. Situation 3. Company running in the losses, but they prepared financials in accordance with the going concern basis, and cleverly they did not disclose anything in the financial statement, particularly notes to account. During the course of audit, we have been identified, okay, because loss is not a clear indication that always it is not a going concern. Because particularly in case of startup companies, first 3-4 years, most of the cases company running in the losses. That is not a indication it is not going to be liquidated. Hence, loss is not the only concern that we should look at. Now please tell me, first situation, where we have to be reported. Situation once again, here the company is running in the losses, but promoters or others etc. is agreed to procure the funds. And there is a certainty and the same is properly disclosed in the notes to accounts. What we have to do? In this case, generally, does we require to qualify? Does we require to disclose in the emphasis of matter para? Yes. First thing, no need to qualify because true and fair view of state of affairs they properly disclose. Second one is what whether to include in the emphasis of matter para, that is the question. No need to disclose also in the emphasis of matter para because they disclosed already. And moreover, they have a certainty that there is a inflow is possible. Hence, we need not be draw the attention also, emphasis of matter para. Situation 2. The company running in the losses and they have tried to procure the funds, but however, no possibility of getting the funds. But the matter was clearly disclosed. Matter was clearly disclosed. Then what do we do? Does we require to qualify? No need of qualification, any test. Second, now what we have to do? Material uncertainty relating to going concern. MURGC, generally called. MURGC, material uncertainty relating to going concern. There is a material uncertainty. Yes, they disclosed. Even though they disclosed, but there is no certainty of inflow of funds. In this case, we have to be included in our audit report. Need not be qualified. Need not be qualified, but we have to be disclosed. Material uncertainty related to going concern. Situation 3. Company running in the losses, but they did not disclose anything in the notes. This is the situation where we have to be qualified. But please pay attention, qualification is always last step. Of course, practically also, generally we will not do the same, but still, we have one important standard, SA 450.
In the host accounts, there is a ratio calculation is mandatory. In the host accounts, ratio workings is mandatory.
Yes.
So there is a 5%, more than 5% variation.
Explanation.
Explanation. Anyway, there are written something else about net worth or negative or some losses or that this declaration is not sufficient.
You are saying that since in the ratio analysis already they disclosed about the differences. Sometimes company running in the losses in the last 2 or 3 years. Okay, last year 50% net worth eroded, now 55% or 54% net worth is eroded. In such cases, ratio analysis may not be reflected. But still, ratio analysis is one element that how to be disclosed. But disclosure in the ratio analysis is itself is not sufficient. Because it is going concern is very much necessary that you have to be disclosed separately. Now, as I said, SA 450. Before we are qualifying any report under SA 705, always we should be first focus about our SA 450. What is SA 450 saying? Very important standard. Evaluating the misstatement identified. Let us assume I identified one misstatement during the course of my audit. Generally, what we have to do? First, we will bring to the notice of management. Let us assume inventory. Generally, how we value inventory? Cost or NRV, whichever is lower. But management is followed something only on cash basis or something else, other than whichever is lower. Come on, what we will do? Don't jump directly, we will qualify the report. First we will bring to the notice of management. Now, my question. Generally, if the management is corrected, then no need of qualification. If management is refused, please tell me. If management is refused to correct the same. Qualify? Quantify. What SA 450 is saying is very important for me. If auditor has been made a recommendation, but management is refused to correct or rectify the same, then never jump to the qualification. Then what we have to do is evaluate what is the impact of uncorrected misstatement on the financial statement. What is the impact of uncorrected misstatement on the financial statement? Let us assume it is a 20 crores company. Their inventory is, let us assume, some 1000 crores. The inventory that we are identified, some nuts and bolts around some 10,000, 15,000. Now, based on that one, I will qualify the requirement means what generally we can imagine. So that evaluate what is the impact of this uncorrected misstatement on the financial statement. If the impact is material, then only we will go for qualification. If the impact is not material, no need to qualify.
Sir, there were some companies starting in 4-5 years back. There is no business, no sale, no purchases, only I-40s or something, annual expenses. We don't know. It will be operating people, we don't know. Same balance sheet can prepare and sign.
Every year more or less same figures. Okay, opening balance, closing balance, no much difference. Most of the cases, same fixed 1 lakh rupees capital. Okay. In this case also here, what we have to do is once again we have to be accepting. That only I am saying. Any uncertainty relating to the going concern, material uncertainty relating to going concern. If they are saying that no, as of now presently we are getting a minimum revenue sufficient to pay audit fee, at least.
Yes, sir.
Okay, then we need not qualify. But whether they disclose the same in the annual report or not, that we have to be reviewed.
It is also in the note statement.
Note statement they have to disclose. What is the present status, what they are going to take the steps in order to revive the company. Then we will.
Sir, in that materiality aspect what you said, whether we have to disclose whether we have done the materiality verification anywhere in the audit report? We have to disclose anywhere.
In fact, in our audit report, generally what are the contents, title, independent audit report, address it to the members of the company. Then immediately opinion para. the revised our new audit report, first static opinion only. After the opinion, basis of our opinion. Then any key audit matter, employees of matter, etc. will be then management responsibility. Then auditor's responsibility. In the auditor's responsibility para, these paras are there. In the auditor responsibility, there are, we have clearly you have to be mentioned. I have been evaluated whether the entity is going concern, ongoing concern, we are reporting there.
What I am saying, even in the listed companies, our balance sheet reports are verified by so many persons in various versions.
At various levels.
Whatever you said, it is immaterial, that quantity of and amount of amount is very less, and it did not affect the materiality concept. So we need not to report. You need not give any qualified report. I am accepting that. But this situation is happened. The for example, 1 lakh rupees of worth of stock is imprisoned at.
Okay, I understand, sir. Now we have to be slightly shifted to SA 320 materiality. First of all, materiality is a relative concept. I have given the earlier example, one example, but the same example may not be valid in all cases, because materiality is a relative concept. What is material for one situation may not be material for other. As I said, for 10,000 crores company, 10,000 crores company, 1,000 rupees, whatever the nuts, bolts, etc. is not material. Okay, whatever they valued, we may ignore because they are following as a system in the last 10 years. We can ignore. But same 1,000, if they paid as a penalty for violating an environmental laws, we cannot take it as a 1,000 it is 10,000 crore company. Here, environmental violation is the matter. Hence, it is a materiality. Is a purely our professional judgment. It will not be take it same in all the cases. Depend upon the fact, circumstance of case, and most important, relevant. If there is involving any non-compliance of law, regulation, most important accounting standard, then no question of what you got this. But we consider materiality generally. 450 saying that evaluate. Don't. My ultimate objective is what? Don't jump always to qualify the report. Before qualify. If they did not agree to our whatever the recommendation, evaluate. What is the impact? Is it going to be effective?
What I am asking, we identified, we are ignored that part as a material concept. But it is written in our audit papers. Whether we have to written in any part of the audit report or not.
Any part of the
disclose in the audit report.
Disclose. That only I am saying. That only we are going to be discussed one by one. When is it required to disclose in KAM, key audit matter para? Is it required to disclose in EOM? Is it required to disclose in the other matter? These paras have been specified by the institute. When you have to be included in these paras, also specified. So if the circumstances is demanding that you have to include it as a key audit matter para or as a other matter para, then we have to be included. Otherwise, no. And in addition to our audit report, our annexure one is there ready. What? Caro. In the Caro, there are so many, almost 21, 22, 21 items are there. Maximum it will fit to that particular one. Those items, as I said, compile, it is that much of not material to report in our main audit report, but is that details required to be reported. Take a simple example. Even in my companies also, company first of all is required to be appoint internal audit. But internal audit is not already internal auditor, our co-fraternity is only is there, but however their reporting, their methodology is compared with our CARO what saying whether the company have adequate system of internal control commensurate with the nature and size of business. They appointed the qualified internal auditors, they are doing the internal auditor, they are reporting, but however as a statutory auditor I am not satisfied. Because some weaknesses are there, some important areas they are not focused. Hence, no need to report in main audit report, but still it is a material in my opinion. Hence, I will not report in my main audit report, but since it is element is there, I will report in the CARO. Compared with the nature and size of business, it is not adequate, it has to be improved. Because they don't have the, let us assume it is really some like a 50,000 crores company and having so many multiple units are there, manual system of internal audit is not good. They have to be digitalized so that, because it is not like an external audit on sample basis we can be examined. As an internal auditor, he has to be examined as many transactions as possible. Hence, with the manual systems they are using, hence it is not adequate. Like this one we can. Now, when we will issue the SS 700 clean report, when we will include KAM, key audit matter para, when we have to be modify our report, SS 705, then when we will include emphasis of matter para, other matter para. With some example, we will discuss mainly. And what is the relevance of SS 720? Most important. This is also, once again, most of our practicing people also ignoring SS 720, but that is very important. What is SS 720? Also I check. Practically, one example I take. One of my friend given an audit report. You know it very well. Our audit report after 2018 was revised. Before 2018, our title of audit report is auditor report. Thereafter 2018, independent report. Before audit 2018, etc., opinion para is last. Whereas now in the revised audit report, opinion is starting only. And the phase only will tell you is it a qualified or opinion, no need to go through the remaining paragraphs. My friend has given in 2019 clean report, whatever according to revised report. That is a listed company, unfortunately. Zero revenue, loss making, very little accounting staff. Okay, we are given the report, my friend given the report. Generally, what they will do for all uploading, you know it very well. Generally, before May 30th, etc., they have to be uploaded to the concerned places starting stage. And of course, filing with the ROC, that is second. First, before May 30th, they have to be submit the final report to the SEBI along with our. They submitted this. Generally, they will go to some agency. Those agency copy paste boilerplate. Old audit report only they forward it. But actually, new report only we are issued. But they taken the old. Will surprise our FRRB. We have our own board. Financial reporting review board. They will every year will select samples and will give to the other members who are empaneled with them. We will generally review. If they identify some material weaknesses, directly matter will be referred to the disciplinary committee. And my friend got notice directly from disciplinary committee. These are the mistakes. What is the main mistake? Is means what audit report. Audit report you have given, so the title itself is wrong. Because once you compare means what all those are the non-compliances. Okay, you are not given opinion first para. Okay, like this one then. Directly. Then after verifying the same, it was found that actually we given the clean report. But they included in the, of course, case is running. We have been proved that it is already be sent through mail, etc. by good evidence that we have given a proper report. But he printed on what? But still we are responsible under the SS 720. What SS 720 is saying that it is our responsibility or writer responsibility to review. Generally, according to SS 210, 210 is what? Audit engagement letter. Generally, the moment we are appointed as an auditor, we will issue the engagement letter. Engagement letter is issued by, it's not appointment letter, engagement letter. Engagement letter is issued by the auditor to the client, defining the scope and objective of audit. Okay, you are appointed me as an auditor. My duty is only to examine financial statement, to express opinion on sample basis. Don't expect me to identify any fraud, error, etc. Okay, my duty is only to express the opinion. I will maintain confidentiality, but tomorrow my peer reviewer come, he will review everything. I will disclose your information also to my peer reviewer. Of course, he maintain confidentiality, everything will be there in the engagement. In that engagement letter only, we will mention what? Before you are issuing annual report, generally you know it very well, annual report is approved in the AGM, then it will be filed with ROS. So before you are circulating to your members in the AGM, first you have to give that annual report copy to me, auditor. Then it is our duty to review as per SS 720. Is there any material inconsistencies? Is there any material inconsistency between our report, audit report, and other information in the annual report? Other information in the annual report means what? Main in the annual report, what will be there? Board of Director report will be there. In the Board of Director report, once again MAD will be there. Management analysis, discussion analysis. So that we have to be reviewed. What we are given. Take the same example. In the financial statement, going concern is weak, that we are also highlighted. Whereas in the management report, they mentioned that Board of Directors, we are very healthy, sound, etc. They mentioned. This clearly material inconsistency. Hence, it is our duty to take the copy of annual report before it is being circulated to the shareholders in the AGM. That's why, if you closely observe, if you take any recent annual reports of even famous bigger companies, in the olden days, they will do without our signature audit report, normal continuation. Whereas now bigger companies, what they are doing, they are putting our scanned reports. Entire report colorful. Entire report colorful. Suddenly audit report is what? Scanned copies only will be there. That is actually good practice. Because what I am giving, what you are printing. Otherwise, like a biler print only 25-26 year only changed and they put the same last year report, this year report. Hence, actually good practice is what? Scanned copies only they have to be included so that our signature, UDIN, etc. is there. That is practice is being followed by some reputed companies. Otherwise, what? Okay, to maintain same colorfulness and decency, etc. If they take in the same, that's not a proper. Hence, we have to review compulsory annual report. That we are intimating at the time of our appointment itself, engagement letter itself. In the engagement letter also, if you go through the template, it's this word will be there. As per SA 720, I require to be review your annual report. Don't share among the shareholders before you are circulating. So that we can identify like this. There is a possibility. Hence, SA 720 is also very much relevant for our entire audit process, which is in 706. Now, when we will issue qualified report is secondary. First, I will focus on this one. EOM, OM. When we will issue emphasis of matter para, when we will include other matter para. When we will include emphasis of matter para. Okay, first simple one, other matter para. When we will include other matter para? Generally in our audit report. Two circumstances very common. You are first time appointed as an auditor. We are first time appointed. Generally, you know, now under the Companies Act 2013, once we are appointed for one term of 5 consecutive years. In 2025 we are appointed, 25-26. 24-25 financials have been reviewed by some other auditor has been. Then what is our duty? First of all, we have one more standard, SA 510. Initial audit engagement, opening balances. Initial audit engagement, opening balances. Initial audit engagement means what? First time we have been appointed as an auditor to that company. Then what is our duty? To review. We need not audit once again previous year. But only thing is what? Opening balances. Because that opening balance, we have last year closing balance, we have to be taken as opening balance here. Hence, whether that if the opening balance have any misstatement, then entire this year also closing balance will show misstatement. Hence, we have to confirm in the first year itself whether opening balance are contain any misstatement. How we are going to do? Once again, we did not audit previous year, but what we have to do? First thing, we should review who audited the previous year financials. Is it CA, non-CA? This also matter. This is also last year it's a partnership firm, not audited by CA. Then I cannot rely upon the same, whereas it is CA. Okay, generally if it is a member of our ICA, we will rely on the same. Whereas let us assume it is a branch, Sri Lankan branch. That Sri Lanka branch is being audited, Sri Lankan auditor, not our ICA member. Then we have to evaluate whether he has followed his standard, whether that standard is relevant with our standards. So simply what our ICA is saying that evaluate the professional competence of the previous auditor, particularly if he is not a member of our ICA. Evaluate professional competence of the previous auditor, particularly if he is not a member of our ICA. Generally, if he is a member of ICA, audited the same, okay, we will conclude. The opening balances are free from this statement under SF item. Now, come. But even though it is audited by our ICA member, I am not auditing once again all previous balances. I don't know about what are the previous year statement, etc. Only I go through the audit report, but not ledgers verification. I did not make entirely. Hence, that point we have to be mentioned in the other matter para. Compulsory. When you are first time auditing entity, compulsory you should include in the other matter para. Otherwise, whenever tomorrow we are reviewing by the any peer reviewer, quality reviewer, or what you call technical reviewer under NFR review, they will focus. Okay, this is your first year. Why you are not highlighted this matter in your audit report in the other matter para? So simply in other matter para we will mention with reference to the balances disclosures made in the previous audit report. We have not audited. This is being audited the predecessor auditor. We have been rely upon the whatever the balances etc. which is audited by some other. One is simple disclosure. I don't know about the opening balances audit. I just only auditing for the current year. So first time when you are auditing, compulsory include this matter in the other matter. Second, now this is a controversy going on. Amendment is also made. SS 600. What is SS 600? Using the work of other auditor. Actually, here there is a conflict going between NFR and our ICA. NFR is saying that, come on, if you are a parent company auditor, you are responsible for all branches, even though it is audited by someone else. I mean, let us assume we are a SBI auditor. How many branches are there? Because we have taken the responsibility for the same. Is it practically possible? Hence, our institute is saying that yes, you should comply with SS 600. SS 600 saying yes, there are certain rules and regulations before you are using the work of other auditor. That's it. But we need not be taken the responsibility of branch audit, which is being audited by another whatever the qualified CA. But come to another matter para. Generally, if at all you are a parent company auditor and branches are audited by branch or subsidiary or any components, generally we use the word component. Component includes whether it may be subsidiary, associate or what called branches. If components are being audited by some other auditor and we are only auditor of a parent company, then the same should be highlighted in the other matter plan. With reference to the values, disclosure, assets, liabilities, etc. that have been mentioned in the of so and so X subsidiary company, Y subsidiary company, Z subsidiary company, I have not been audited. Generally, this is very much relevant, particularly for our company having branches outside India. Particularly outside India, one software company having one more branch in the US, we are not auditing the same, that local CPA will audit. Sometimes local CPA also will not audit, local CPA only just review. Because they only regulations only if it is exceeding a turnover, then only the audit is required. Unlike us, zero company also need not be audited there. Like this one. Hence, we have to be mentioned in the other matter para compulsory. I have not been audited. I rely upon solely the report given by other auditors in respect of these branches along with values, etc. Because in consolidation is what it is 10,000 crores. 7,000 crores are subsidiary company. Sometimes is what consultation is entire, there is no parent company turnover, entire turnover is subsidiary only. Okay. In such cases, compulsory in other matter we have to mention what branches or what subsidiaries we are not. These two cases are very much necessary. We have to include in the other matter.
Actually, central auditors are doing that under some branch auditors.
Compulsory. Of course, according to SA 600, some rules are there. When branches are audited by some other person, etc., then we have to be reviewed. First of all, who audited him? Is it a member of ICA or not? If he is not a member of ICA, evaluate his professional competence. Second, generally now according to SA 600, we have to give one group manual as to auditing and accounting manual has to be shared. Nowadays, you can observe. Earlier that complaints is not made, but nowadays they are making a complaints. What central auditors are sharing some this one. You have to fill the same. That is in compliance with SA 600. What methods you are evaluated, what material you have taken,
Accounting principles.
the accounting principle, whether you have been completed. First they have to share group accounting manual, then they will give the questionnaire, how you audited. Why they are giving questionnaire? Because under SA 600 it is duty to evaluate the work performed by other auditor. Hence they are giving the same. So that if they taken the same, they are duly compliant with SA 600 to prove this. Whereas NFR is saying that whether you taken or not taken, etc., you are only responsible. That only problem. Of course, it is not decided, but still. So, other matter generally we observe in these two cases common. And other matters that we can include is, as our senior has said, like earlier, there is one important matter. But however, we consider it is not material to qualify. Not material to qualify. But also we consider if that matter is not included in nowhere in the disclosed in the financial statement. It is one important matter. Nowhere it is disclosed in the financial statement. Auditor consider this is a matter that have to be disclosed, but nowhere it is disclosed. But at the same time, non-disclosure will not affect the financial statements and our true and fair way of our opinion. If it is affecting the true and fair way of our opinion, we will qualify. So since it is not affecting true and fair, but still we consider it should be disclosed. Then in those rare circumstances, we will include in the other matter, but not emphasis matter. It is the point not disclosed in financials, notes to accounts. Auditor consider disclosure is necessary. At the same time, non-disclosure does not lead to true and fairness of the financials. Hence, we are not qualifying. But still, we feel it is better to disclose. Then we are including the other matter. Now,
Sir, one doubt, sir. If you branch auditor discloses in other matters, the central auditors will also disclose the same thing in the main report.
there is no such thing. If it is related to only one specific branch, with reference to him, with the total materiality, that is not a matter. Sometimes, even if you qualify in the branch also, you will not consider because only on the materiality. If it is really affecting, for example, you identified one systemic error, a systemic error that is affecting the not only this branch.
But they consider the matter.
Then they have to be considered. Compulsory once we qualify the report as a branch auditor. Of course, yes, qualify means what? Generally 99% if you qualify, you quantify in embassy. The moment we made an embassy, compulsory they have to be considered, even it is 1 rupee. Either is a general branch will say materiality less than 5,000, more than 5,000, don't do embassy, don't embassy. Because once we raise the embassy, even for small amount also, they have to be adjust the financials, considerations. And the main problem is what here that will affect the systemic. Not only related to your branch, that is a similar problem entire across the all branches. That is the reason they will not. I will take one small practical example. One nationalized bank with a due privacy. Nationalized bank GM have one good friend. You know, recent in bank over audit. According to recent RBI guidance is what? Any bank loan renewal, no automatic renewal. The customer has to pay entire cash. Okay, then you take. earlier whatever process is what come on automatically is there.
Minimum 1 day gap should be there.
1 day gap. Or at least some cash should be deposited. Okay. Like, but that is not followed by all banks. Particularly cooperative bank, regional rural banks, etc. Never they follow. Okay, auto renewals have been there. In respect of same one branch, one auditor identified, we stick to the same. No, I will qualify because it is some 8 crore, 80 lakhs or 1 crore is there. So no question of this one. So that come on, embassy. Here the general manager, the branch manager reported to the GM. GM is called to me. Do you know so and so auditor? If at all, just inform. The problem is systemic error here. If that particular branch auditor is reported,
All branches will be affected.
then central auditor will ask, okay, this practice is being followed by your bank. Hence, come on, review all gold loans. Then it is 500 crores entirely. The branch means what? The entire balance sheet will be changed. So that systemic error only issues. Now, when we include the emphasis of matter, this point you must be careful. Any point we should bring to the emphasis of matter para only if the related disclosure already made in the note statements. For example, take the company made some agreement with the bankers, or company made an agreement with some what called a new project with some joint venture proposal is there. They disclose it properly. But as an auditor, I want to draw the attention of members. Hence, I want to highlight. I want to draw the attention of note number 15. In the note number 15, entire details are there. I am not reproducing the note number 15. Simply, I will mention. I will draw the attention of note number. So, the question of any matter that will be included in the EOM must be mentioned in the note statement. If not mentioned in the note statement, generally we will not refer to the EOM. Whereas if it is mentioned in the note statement, don't bring to the other matter. Please understand. So that before we are reporting anything on the emphasis of matter para, first we have to check, is it disclosed in the note statement? Yes, then only we will link up. Matter presented or disclosed in the financial statement. First point, it must be presented in the financial statement. Fundamental to users' understanding of the financial statement. Yes, before you are including in the emphasis of matter para, we have to evaluate, is it fundamental to understand? Take a simple example. Ind AS 114. Ind AS 114 is applicable to the regulated entities. Regulated entities means what here?
Some banks have RBI.
Insurance companies, banks, most important electricity companies. For electricity companies, ERC orders will be there. Now electricity companies, every year ERC orders will be there. How much is the capital expenditure, revenue, what is the price of your power, etc. will be decided by the ERC. Only to that end they will accept. Beyond that one they will not accept. Beyond that one they should not be recognized. For example, this year 5,000 crores capital expenditure they made. But he has given approval only 4,500 crores. So that in the capital expenditure they have to be recognized only 4,500. This 500 under Ind AS 114 deferral account they have to open and kept there. If Ind AS 114 they did not adopt it, then as a contingent liability or contingent asset they have to be disclosed. Now, these points, let us assume it is a regulated entity, like according to our ERC etc. This year 5,000 crores have been approved, the same way recognized, already they disclosed in the note statement. But this is one important matter. As an auditor, I want to bring to the notice of management. Hence, I will bring the same here. As per the ERC order, only this much amount has been recognized. And most important, including any matter in the both other matter para, emphasis of matter para, we are not changing our opinion. We are not qualifying our opinion. That means what our opinion is remain the same, whether it may be clean report or you may be qualified some other matter. But with reference to these matters that we are including the EOM and OM, our opinion is not changed. But why you are included? That is our practice to disclose.
No quantification.
No quantification. Quantification maybe you can do, but however that is not a negative. Here the point is. For example, as I said, 5,000 crores is approved, 4,000 crores has been only approved. That point I mentioned. This year ERC order so and so number etc. approved the 4,000 crores capital expenditure. That's it. It is not a qualification. Only to draw the attention of members I will highlight. EOM and other matter. Now come on, what is KAM? When we will include in the key audit matter panel. First of all, according to SS 701, key audit matter para is not mandatory for all companies. Key audit matter is only mandatory for listed companies. For listed company, compulsory we have to be included. Even other than listed company, if auditor believes this has to be included as per our professional judgment, then we can. But KAM is optional for other companies, mandatory for listed companies. What is key audit matter para? Key audit matter para is directly linked with SA 260. SA 260, 265. What is SA 260, SA 265? Communicating to those charged with the governance. Under SA 260 we are communicating to those charged with the governance. It may be board of directors or one level below the directors who have the governance, particularly in case of listed company, once again audit committee. Generally we consider audit committee and board of directors are considered as those charged with the governance. Into the day-to-day, right from beginning, issuing the what called audit engagement letter and defining our scope and objective. Throughout our audit, we will establish a two-way communication with those charged with the governance. Once we communicated, whether it may be here, communication always two-way. We are communicating to them, we are receiving communication from the audit committee, those charged with the governance. Now, after completion of the audit, if the auditor believes that this matter is having very significant during the course of audit of current year, please understand, when we will include the key audit matter para is, first of all, it is mandatory for listed companies, second, optional for other companies. When we will include here, during the course of audit, in respect of those matters that we are communicated to those charged with the governance, which we believe in our professional judgment is most significant during the course of audit of current year. Please pay attention. What is significant in the current year may not be significant in the next year. Take an example. In 2000, whatever the demonetization period, etc. That is most significant on that year. Not at all relevant in the subsequent year. So that in that particular year, key audit matter para we identified, let us assume we deal with most of the transaction in the particular cash transaction or whatever the reasons, we have been facing some problems, etc. That we highlighted on that year, key audit matter para demonetization. That may not be relevant in the subsequent year. So the most significant during the course of audit, identified by the auditor based on his professional judgment, and the most important in the relevant year. Hence, what is KAM in the current year may not be KAM in the subsequent year. May not be KAM in the subsequent. With reference to KAM, whenever we are reporting, unlike in case of emphasis of matter, other matter, generally with small 2-3 lines also sufficient. But key audit matter para, whenever we are including, there is a structure. What is the key audit matter? Because key audit matter para is what most significant that you are identified during the course of audit. During the course of audit means what? Here we have to be explained what is our audit procedures. The key audit matter para you have to be include. For example, taken within for this particular company last year, company due to some liquidity issues, banker approached the NCLT under IBC. The insolvency bankruptcy court. The company had taken the loan from the bank. Since one or two installment is defaulted, become NPA. Nowadays, banker need not wait for 6 months, etc. Also, once become NPA, approached the IBC. However, generally resolution plan, etc. is there. Meanwhile, we are able to procure the funds, etc. and we repay all this money. Everything is disclosed in the notes account. One, generally will include in the emphasis of matter para, but still as an auditor I have been examined the entire process. In the current year, that is obviously most significant. The whatever the audit process that we have been followed, that I can highlight it in the key audit matter. In the key audit matter para, not only the matter which is significant we have to disclose, what audit procedures we are actually followed, subsequent whatever the substantial audit procedures that we are followed, we have to be mentioned briefly. Our audit procedures include verification of records, subsequent events, okay, confirmation from the external parties. Like this one, what procedure that we have been followed have to be included. And so we closely observing listed company annual reports, etc. in the audit report, the key audit matter para clearly they will mention what is matter, what procedure we are followed, what is the matter, what procedure we are followed. Like this one. Hence, key audit matter. And most important, whether we are including the key audit matter para, emphasis of matter para, other matter para, our report, our opinion is not changed. That means what? We are not qualifying. The moment you are include any matter in these three matters, that means we are not qualified. You may qualify the report in other aspect, but with reference to aspect that we include in these paras, our opinion is remained. That means our opinion is not changed.
If any deviation we have mentioned in the key audit matter, whether we are protected, sir. For example, confirmation from the others. We are not taking the confirmation from the other. Then in key audit matter, that point must be mentioned that confirmation is not taken by the others. But all other procedures are followed.
No, sir. With reference to external confirmation under SA 505, we have a clear picture. External confirmation, there are two things are there. Let us take same example I am taking. Why we should not take the same to the key audit matter is external confirmation. First point, external confirmation, you can observe even in, I am also auditing some companies, receivables, payables, more than 10 years are there.
Now the frauds also from the receivable state.
Receivables, payables, all these one. Yeah, otherwise even if they include in KM, they, first of all that is not possible, that is not correct. Why it is not correct? First thing, obtaining external confirmation is one of the essential part of our audit. What procedure they have been defined clearly. We have two options, negative confirmation, positive confirmation. I hope you know the negative confirmation, positive confirmation. Generally for big values we will go for positive confirmation. Positive confirmation means what? We will send the letter. We means what? Through client. Through client we send the letter to the whatever his customer, payable or receivable. According to we are auditing of 25-26 financial statement as per as on March 31st, your balance is 5 crores 36 lakhs 24,000. Please confirm balance to this email, whatever, etc. There. We are waiting for their confirmation. We are waiting. Whereas negative confirmation means what? Here small vendors, 5,000, 10,000, but there are hundreds are there, thousands are there. Is it possible to get confirmation from all them and verify them? Practically not possible and not required also. And so what we will do? We will send negative confirmation. As per our record, your balance as on 31st March is 5,030 rupees. If it is incorrect, please respond. He is not a 5,000, actually he is 50 lakh. Obviously we will respond, no, I have to get 50 lakhs, how you will say 5,000? So that we will send this for small balance, etc. negative confirmations. But, so first we have that procedure. Second, now the question is, all these confirmation we have to send how? Through our client. Never we can approach directly, because without the client consent and without client, in fact all these mail have to go through client. Confirmation has to be received by the auditor directly. If the management is refused, no, don't go to that particular client. Come on, you tell me what I should do. If management refused, no, don't go to that client. Not a gentleman. Because sometimes it is possible.
Sir, in this situation, we can ask the internal auditor, send the external, whether he is considered as the management or.
Then we'll go to that diversion. Whether to rely upon the internal auditor, SS extent we have to be discussed. First of all, in this case, don't bring to the internal auditor, because the internal auditor we cannot rely, and it should not be considered as an evidence. Here, what our standard is saying, I am going to SA 505 only. I can't SA 505 what they are saying that, okay, if management refuse, don't jump to the conclusion, once again qualify. Okay? Don't consider it as a limitation on the scope of work. Then we should evaluate reasonableness of the management refusal. Apply alternate audit procedures. Alternate audit procedure means what? Let us assume he is a 3 years old customer, some 50 lakh rupees. Trade receivables or payables, whatever. Management refusal, don't go. Then we ask why? Because some dispute is there. Okay, what dispute? Some legal dispute. Come on, show the record. Case is already pending. But still, we'll verify. In last 3 years, do you have any transaction? Every month some transaction is going on. Dispute is there, but still every month transaction. In every month the healthy transaction is there. Why you are preventing me to approach the same? So that is a suspicion. Then we have to be taken as a qualification. On the other hand, there is a dispute from 3 years, no healthy transaction. There is an evidence that legal case is already filed by either party. Then yes, we should not be we need not go to the confirmation. The same will be noted down. Some cases pending before court. Either you may disclose in the emphasis matter, or no need to disclose also if you satisfy. So that in case management is refused to get the confirmation, then we should evaluate reasonableness of the management request. If alternate audit procedures such as external confirmation, subsequent transactions, mainly subsequent transactions. Okay, once a dispute arises, no subsequent transaction. Every month a healthy transaction is there, then we should not take the same. We have to get confirmation. So that, and here we should not use the work of internal auditor. Okay, unclear. Now, come to, we are discussing SA 701, key audit matter para. So key audit matter para is matter that we consider is most significant during the course of audit based on our professional judgment relating to the current year. Generally, key audit matter para, whenever you are highlighted, compulsory you have to mention what audit procedures we have been followed. What audit procedures we have been followed. Now, generally, whenever you are bringing the report to key audit matter para, those matters that were already communicated to those charged with the governments, like communicating to the audit committee, etc. With that, this is a published report, hence I am sharing. Okay, so that it is not a privacy issue, it is a published report, hence I am sharing. I am the auditor of TG Genco. Last year audit report. I have given qualified opinion only, basis of qualified report. Actually, it is a public company but not listed company. But still, I consider it is most significant. Key audit matter generally. Key audit matters are those matters in our professional judgment, etc. Here, with reference to some ash utilization, according to environmental guidance, now how the thermal power will be generated, by combustion of whatever the ash is the byproduct.
Coal.
Now that ash is they have to dispose. In particularly some units the ash is so much of pond is there. That they have to be disposed. Otherwise environmental guidelines, some deposits etc. will be there. As on today, actually they need not pay any penalty, they need not pay any deposit etc. But I consider in subsequent years it will become very important. Most significant matter I observed during the course of last year. Hence I want to draw the attention of members. I included the same key audit matter. How it will be included? As at 31st March, the company has reported accumulation of some substantial quantity of fly ash and pond ash classified as legacy ash under the Ministry of Environment and Climate Change etc. notification dated so and so. These regulation mandated phased out 100%. So the key audit matter para fly ash. Here as I said, whenever you included the key audit matter para, compulsory we have to include the how our audit procedure, how our audit addresses the key audit matter. We reviewed the ash stock records, utilization data, applicable regulatory information, held a discussion with the management and the technical teams regarding utilization plans, complaints, assessed the state of evacuation projects and examined the disclosures in financial statement also. Yes, I personally discussed with all the CEs of the plant level and how they are doing the same physical I visited etc. It's some procedure I follow, the same I do. And just now as I said, last year is the first audit mine. It's the first time I am auditing. Hence I highlighted the same in the other matter. The financial statement of the company for the year ended 31st March 2024 were audited by the predecessor auditor who expressed qualifying opinion so and so. We were appointed as chartered of a company with effect from the financial so and so. And apparently this is our first year of audit of company. Our opinion in the financial for the year so and so does not include any observation of the comparative financial information from the preceding year which has been audited with the predecessor auditor. Generally, you know it very well in the financial statement, comparative figures will be there of preceding year. Our audit report belongs to only current year figures. The comparative will consider general as a corresponding figures, not even as a comparative figures, we will consider it as a corresponding figures under SS 710 actually. Then since my audit report is only belongs to the current figures but not to the previous year figure, the same I highlighted in the other matter. That's why first time whenever you are auditing, this para must be included in the other matter. I am auditing first year, so previous year figure I don't know indirectly. So that is being audited with some other. So that is what tomorrow anything happen we are safe with reference to the previous year. The key audit matter para presently is applicable mandatory for only listed companies, for others is only voluntary. Yes, you can include for others also. But whenever we are including key audit matter para, those matters that we have to be first of all discussed with those charged with the governance, also explain what are the procedures that we have been followed. The emphasis of matter para whenever we are included, ensure the same is first of all significant one. Second, already disclosed in the note statement. Already disclosed in the note statement. Then only will include the EOI. If it disclosed in the what called financial statement, don't disclose in the other matter. Only the other matter there are generally two situations. One, first time audit. Second, when we are not audited branches in those cases.
What of the C point you were mentioned in other matter paragraph, it is actually related to C sir. Cross reference of note number 1 also.
So,
Under other matter paragraph. The point number C is within the protection of note number 40
now that company not appointed women director.
Second, next point.
With attention over the financial statement which is described company compliance with the corporate social responsibility. Yes, it is correct only. I have been discussed the same. I'll explain the reason also. Okay, after so much of deliberation, I have been included the same. Obligation under section 130 for the year so and so, the company was required to spend 1 or 2 crores. Then the center was transferred separate bank account and so and so. Now what happened is, when the matter is disclosed in the financial statement. If it is important one, then we will include the same into the emphasis of matter. Whereas if the matter not disclosed in the financials, here they disclosed in the financials some other figure in the CSR. There is small deviation, but at the same time that is not sufficient to qualify the report. That is partly only some amount, because the amount that they transfer to the what you call after 6 months, 3 months, etc. That I consider there is a difference amount, that reconciliation has to be made. Same amount is not sufficient to qualify the report. But I want to draw the attention. Since the amount is not tallied with the disclosures, I did not include the emphasis, I included the other matter. If it is tallied, then I will include in the emphasis of matter. Same as it is matter, I will include in the event. Even previous one also, company is required to appoint women director. But all the directors of government companies being appointed by the government only. Governor of whatever the concerned state. Okay? So that in normal cases, then penalty all these one will be there. Imposed by the ROC. Whereas in these cases, government company generally, okay, obviously management also will say, management whoever the IAS etc. will say, no, we are not responsible, that will be appointed by the governor. We are already wrote the letter. Yes, they wrote the letter. We need to appoint some independent director, women director, not appointed. So from management point of view, there is no negligence. But at the same time, they did not disclose in the notes. Okay, we are not appointed women director. Because when we are asking, then they will give answer. We wrote the letter, but they did not appoint it. Government is. But since it is important, it is a, from our point of view, it is a company. Come under the Companies Act, they require to appoint the women director, but not appointed. I want to draw the attention. But at the same time, it's not a default of management. Default of management, that is affecting the financial statement. It's only simple non-compliance. That is also with the government. Hence, I included only the other matter, not to qualify. Okay. If really that affecting the financials, we will be including whatever the financials.
Sir, for small companies, it is required to disclose KMA is not applicable to this company. Like that?
No need,
No need, sir. Just simply leave it.
Even in the listed company also, they will include only this para. That's it. But most of the listed company, if you observe, they will only this para they will mention, and they will mention one point. There is no key matter. We observe. Maximum cases they said, but the para must be included in case of listed company audit report. Whereas in case of our private company, no need to include this para. Next, before we are taking the break, after the break we'll discuss detailedly when we have to be give the what called most important under SS 705. Under SS 705, three situations: whether to give adverse opinion, whether to give disclaimer of opinion, and the third situation, clean report. Broadly, there are only two types of reports. What? Modified and unmodified. Unmodified means what? Clean report. Here unmodified means what here? The audit report as given in the SS 700 as it is we are giving. We are not modifying. Hence it is unmodified. Whereas the moment you are making changes to the report mentioned in the SS 700, your modification. Modification means what? Either you may change the opinion or you may change the report without changing the opinion. For example, other matter para. Other matter para emphasis of matter will come under SS 706 actually. I included one other matter para because this is first year audit, I don't know about the previous year figures. I am modifying the report. Same as the structure I am not giving because I may added one para. But at the same time my opinion is clean. Then it is known as what? Modified report without changing the opinion. So when I include the emphasis of matter para, when I included the other matter para, I am modifying the report, but without changing my opinion. Whereas the moment you change your opinion also, then it is modified report under SS 705. You are modifying the report means what here? You are modifying not only the report, also opinion also. The moment you are changing the opinion, then SS 705 will happen. When under SS 705, we have to modify our opinion. Mainly, misstatements wise, limitation on the scope of audit wise, already we discussed, going concern basis. In these three different situations, we have to be do this. We'll discuss this. After that one, we have some what called some handouts are there. All whatever we discuss, some practical cases. Okay, so that easily we can answer the same. So that when we have to give, when we have not to give, etc. etc. So, let's have a small break. Then after the break, we will. How shall I continue?
The hall itself. Let us complete 705 also, sir. 705.
The post lunch obviously.
Retention of audit working papers is of very crucial importance, I think, these days.
Yeah, sir.
That is one area which is neglected by
Majority.
because,
Practically not possible, sir.
that's what I'm saying, sir. We are really constrained the timelines.
It is practically not possible.
That's what-
Okay, since you asked, I'll show you the due respect of client also. How many working papers we supposed to do?
Sir, if any fraud identified, everything comes matter. Just like Rajesh reports now the fraud identified, but not proved. Everything proved in the court of law itself. But in this matter, social media and SEBI itself identified some mistakes are there. With the SEBI identification also, any impact on us as an auditor?
First of all, yes, matter impact will be there. Two things are there. First of all, you are saying that is auditor reported, not reported?
Reported.
Even the auditor reported. Now, first point is, any regulating authority is focused on us, like fraud, whatever it. There are certain internal our regulations are there. FRRP, first thing. Financial review report, they will review how he is audited, etc. FRRP somehow within our HC.
Yes.
Okay, of the record. Somehow we can manage. Little.
Okay.
Not 100. QRB, this is most important. Quality review board.
Sure.
Quality review board. Quality review board, FRRP is constituted by ICA. All members are, head is also our central council member, etc. No problem. It's routine process. Whereas quality review board is constituted by central government. 5 members are our council member. 5 members are nominated by central government. IAS, Indian Audit and Account Service, some RBI representative, SEBI representative. And chairman is also other than our council member. This quality review board will not listen us. Once your audit has been selected by quality review board, then imagine, I think those pumps which have been got peer review peer review, so small questions will be there. Party A, Party B.
That is.
Party B ki mana anagotuganu our firms will be very much suffer. Wow, so many questions, so answers. What is this? Huh?
You will any questions, sir.
That is only trailer. That is only trailer.
EMC also.
That only time peer review is simple trailer. Really trailer. Not a trailer. Quality review code, you will have 250 questions only on the SQC. Total 480 questions will be there. That is why. In fact, whatever the questions you are answering with the peer review is only small part is taken from them. Very small.
What came up 50 days with peer review.
Generally, I am consultant for peer review process. Almost in the last 1.5 years, for more than 60 audit firms I have done. Without zero query. Zero query. Once I done, will be finished. Compulsory. Only thing is, as per SQC one, we have to be answer on this one, and generally for peer review, most of the people you will suffer for getting UDIN and exits. They only will take much time. Either prepare or this person, they will not, they advise properly how to prepare the UDIN and exit, then problem will not arise. In fact, here, that's why I said, peer review is very small part, 1% of the 100% of quality. In the quality review, there is compulsory, every auditor has to be, of course, they will not taking only 10 to 20% only, then sending to the disciplinary committee, but generally they will do advisories. That advisory will have negative effect on the our profit, audit firm profit, particularly when we are going for any C&A audits, etc. This will be deducted. Even in the what called peer review, how Part C you did not done. Part C will be there. In the Part C, marks will be there. These will have negative marks. Quality
This is
reports
not
are
applicable
this.
for the last year, right? From 1 to 26, I think it is applicable.
No. Part C is the applicable right from the beginning for listed company auditors.
Listed company.
For other company auditors, they are recommending right from the beginning. Now that Part C was revised. Part C was revised from the 1st April 2020. Earlier is what AQM 1, now AQM 2. Part C means what AQM, audit quality metric.
Sir, next any other organization, sir? FRRB and QRB, next to.
NFRA, our wonderful brother is there. NFRA. Then with reference to our taxation, we have one separate one, tax audit quality review board is there. That is purely about our tax audit files. Tax audit quality review board. These three always remain. That quality review board will select the file, as just now as you asked about the fraud related issues are there, then quality review board. If that company is a listed company, NFRA will select. For example, recently you may observe Coffee Day case is there. Coffee Day auditors is guilty. That is a listed, if it is a listed company or having turnover more than 1000 crores, etc., then NFRA will take up. If that size is not listed company and less than 1000 crores, then QRB will select.
But this much of verifications are there, but still how the Rajesh exports like the companies are escaping.
These are there only when they identified fraud, they are coming. They will not prevent. For Rajesh experts, there is no preventive control. Now all this one is coming latter stage.
Okay.
It's not a preventive control. Because
Sir,
most of them don't know about PRB, NFRA, etc. Only if they got, etc.
preventive control, sir, is it possible to verify all these questionnaire in there?
Now we are going to share one. Now all these companies will concentrate on our Rajesh exports, all these reports.
If you want like that one, what are how NFRA will be there, how reports will be there, just to open one time whenever you have free time, sir, NFRA website. They given clear inspection reports they have given. With reference to this form, we have identified. You will surprise sometimes because for some big four, initially they focus on big four. Big Four means what? Their documentation is obviously the fee we are charging for 50,000, they will charge 50 lakhs also. They have that much of mystery, etc. Is there huge documentation they maintain to complete with all these one. But once NFR is visited, they have to identify something, otherwise they did not done proper work. So they have been identified certain items, it is like a funny. Whereas like a copy day, exports, etc., they will charge, impose the penalty 50 crores, 100 crores on our audit books. Debarred 1 year, 10 years like that, depend on the size of them. These will come under the latter stages. Now surely they will impose the penalty on the same, double of the audit fee, or sometimes based on size of the firm, debarred like this. For small firms only they will do advisor. Now that is very, they are very be ready. Okay. Is there? What is SA 299? SA 299 is saying about joint auditor. When joint auditor appointed, the question of reporting whatever the documentation is required. When there is no joint auditor, no documentation is required. SA 401 is there. 401 is what? When particularly when you are using the services of service organization, how you are going to be reported. Service organization means what here? The entire accounting work is outsourced. BPO, KPO, BPO, whatever, the entire outsourced work. You are auditor of that company, nothing is there here. Only thing the reports given by the service organization. What is our duty? Sir, I go to the service organization, generally not required, not possible also. But that service organization is processing the data of hundreds of clients. Okay, not only us. So that you cannot go to that one and evaluate. So that is what type 1 report, type 2 report, etc. will be there. That we have to be granted. So that, but the question of compliance with the SA 401, etc. will arise only when our client is outsourced his data processing. If it does not outsource it, then that is not applicable. Like SA 401, SA 299. These standards generally not applicable unless it is required. Similarly, even if the company does not require to appoint the internal auditor, not appointed, question of SA 610 will not arise. Opening balances. This is applicable. SA 520, analytical procedures. You know it very well. Analytical procedures means what? Analysis of significant ratios and trends. Compulsory, we have to be analyzed. What is the, particularly, of course, in our financial statement itself, it is there. If there is a variation is exceeding a particular limit, come on, we have to give explanation. If they did not give an explanation, then we have to be report that one also. In the analytical procedure, we have to be analyzed why that much of profit increased, profit is reduced, expenditure wise, etc. We have to be. This is most important one. Sampling one. You know it very well. Our audit is being performed on obviously by selecting the sample wise. How you are selecting the sample? Different sample methods are there. Simple sampling, simple random, stratified random. Generally is what in most of the transactions are uniform in nature. All transactions are around 5,000 rupees, etc. We select some transaction randomly. Whereas some transactions, the range between two transactions is very wide. For example, one transaction 500 rupees, whereas one transaction is 50 lakhs. Randomly you select even 90% transaction all are 500 only. There is no, because here you may value, you may perform the sampling of 90% of transaction, but value is 10%. Then there is a still possibility of misstatement in financial statement. Then you will go for stratified random sampling. In case of stratified random sampling, whole population will be divided into some 3-4 groups, like 5 lakhs to 50 lakhs. There we will select some more transaction, 10 to 50 lakhs, 100% transaction.
1 lakh to 10 lakhs, some 50% transaction, less than 1 lakh, 5% transaction. Here sample wise you may select only 30-40% transaction, but it is representing more than 90% value. Then even if there is a 1 or 2 misstatement are there in the financial statement, that is acceptably low level. Please pay attention, we are giving opinion, not certificate. The opinion indicating only reasonable assurance, not absolute assurance. Whereas in certificate we are giving absolute assurance. Whereas in audit report only we are giving reasonable assurance. But another way it is saying that reasonable assurance is high level of assurance. Please pay attention, in case of listed company, quarterly review reports we will be given. That review reports are moderate assurance, not high level of assurance. Whereas the audit report that is given at the year end, it is high level of assurance. But it is reasonable, not absolute. So what is your high level of assurance? Reasonable assurance means what? Yes, financial statements are free from material misstatement. We never give any report that financial statements are free from misstatement. Material, it is free from material misstatement. 1 or 2 misstatements are there, but they are acceptably low level. Sir, why you are not giving 100% assurance and absolute assurance? Why you are not examining the 100% transaction? If anyone is asking the question, then our institute itself is given according to SA 200 overall objective of audit. There are certain inherent limitations to our audit. What are inherent limitations? First and foremost, time constraint. Okay. My symbol is different from my word, but actually time and cost constraint. Yes. Recently, one of our friend has been saying, case he has been received notice from disciplinary committee in respect of an old case. In 2013-14, he signed some serious fraud investigation office, SFI. They had done 4 and 5 years of investigation. In 2021, they closed the investigation, and after 4 years of rigorous documentation, that means what, after 10 years, they given small notices given to the faculty. Your member is okay. In fact, our member done very well. I am very happy. At that time, if I will be there, I could not have that much of good audit also. Then I said, see, one word, inherent limitations of audit. In 4 years of audit, you could not, you identified this 1 or 2, 4 years of investigation with more powers, you identified 1 or 2 related party transaction which I failed to identify. We done 30 days, 40 days or 1 month, because we have a limitation. Before the AGM has to be done before the so and so 30th September, whatever it, and at least 1 month or 2 months before we have to complete the audit. All this one by one link is there. But we have inherent limitation, time and cost constraint. Okay, and we are performing audit as permitted by our SA 530 on sampling basis. Sampling is not a what you called privilege. It is a procedure that is we are being followed. Please understand, sampling is not a privilege. That is being a procedure. Yes, I will examine on sampling basis, not possible to examine 100% transaction. Hence, that is the reason I am giving reasonable assurance, but not absolute assurance. Okay, so audit is not investigation. Don't expect anything. Absolute assurance. SA 540. What is SA 540? Evaluating accounting estimate, including fair value accounting estimates. Management is primarily responsible for making appropriate accounting estimate. Accounting estimate means what here? Depreciation. Of course, depreciation as per the subject to law. Valuations. Mainly here, how long the asset should be depreciated. If law is not prescribed, okay, generally 5 years, 4 years. If the rates are prescribed within a tax authority, as per the same. Take an example. A company dealing with some antique items. The same pen, let us assume if it is 100 rupees outside market, whereas this pen is used by some prominent figure, okay?
Good.
Mahatma Gandhi signed on this with this pen only. Obviously, how much is the value? Company have this type of pens are like articles are there. They will disclose in their financial statement. It is a fair value accounting estimate. Management is responsible. Auditor is not there. Our duty under SA 540, all the accounting estimates, including the fair value accounting estimates made by the management, is reasonable or not. We have to be based on the records, etc. That is one standard that we have to implement here. This is the most sensitive. Please pay attention, particularly from quality review board, NFRA, any peer reviews, etc. Some areas are there. Very sensitive. Most of the cases, they will identify the auditor is guilty in this area, auditor is guilty in this area. Mainly 5 areas particularly. Of course, last and first is 700 audit report, because ultimately all these will affect the audit report. In fact, the first one is risk assessment. Most of the cases, the audit documentation is sufficient, is not adequate, etc. They will say on the risk assessment, SA 315 documentation is not properly made. But SA 315 documentation is, there is no fixed template also. Depend upon the nature and size of business. The risk assessment that we made for power sector is different from banking company, which is completely different in case of a software company, and altogether will be different in case of a cryptocurrency based company. So risk assessment standards, say 315, 330, etc. First, this is the common area most of the review agencies will focus on this. Second, sampling. How we are doing sampling, etc. Whether you are by simple sampling, random sampling, what sampling you are followed, etc. Generally, they will ask. Not proper sample taken, not population taken. Okay, this is generally one area of accusing us. Questioning us, we cannot understand. Third, most important area is related parties. Related party disclosures is very sensitive because identify. Once again, management is primarily responsible for identifying, disclosing, evaluating transactions with the related party. But who is related party? How to identify? So many accounting standards, that is ASA, right from 18, okay, particularly from the point of Companies Act, entire 180, whatever the sections 185, 186, 180, all this one, and with reference to our SA 550. What SA 550 is mainly saying, while we are documenting, first of all, whether management is identified all related party. Of course, in the notes to accounts, etc., they have to be disclosed. Our main duty, entire, in fact, is whether these related party transactions have been entered in compliance with the applicable provisions of Companies Act, like section 180, etc., and have been properly included in the related party register, like 188, and most important, whether these have been entered on arm's length basis. Whether these transactions have been entered on the arm's length basis. This is the main question.
Shall we put all the transaction purchase payment agreement? So one.
No, as per particularly if it is India's-based company, disclosure should be all related parties, nature of transactions, amount of transactions, all these will be of disclosed. Management, actually, in the notes to account, management has to be disclosed.
Some purchasing some materials. Sometimes we are sale to that party also. So purchase, sale, payment.
You are saying from whose point of view?
So company's point of view.
Company's point of view.
What related party? Suppose
Purchase
there is a-
Related party, for take an example, director.
Suppose there is a subsidiary company, there is a big transfer or something. There is subsidiary companies or associated companies. So meanwhile associated, so the transactions will be done. Sales or purchases or some advances or some grants.
First of all, disclosure point of view, in the financial statement, you have to be disclosed. total transaction, not a transaction wise, total purchase, total sales, not each purchase wise, each sales wise, no. Total purchase made during the relevant period, total sales made during the year. Now, with reference to here, related party includes even sometimes directors also. Then we use the word interested director. Then interested director has to disclose. Actually, in the old act, 1956 act, interested director has to disclose only in case of public company. Whereas 2013 act, come on, where the private public interested director has to disclose. Now the question will be like where to disclose, when to disclose, clarity is there. Now I am a director of a subsidiary company. I am interested director. Every day sales and purchase are going on. Now every time I have to stand it before the board, yes, I am interested in the transaction, not required. Hence is what the law has been saying. Come on, you make a general declaration at the beginning of the year. All transactions made with reference to this company, I am interested because I am a director of this company. Once you made a general declaration for all transactions made in that year, unless there is a change in your position, deemed to be compliant. Like this. With reference to financial statement, yes, the figure, you need not mention each purchase, but purchase you have to be mentioned. Total. Here, main our duty is what whether transactions have been entered in compliance with the applicable provisions and arm's length basis.
Arm's length, why, how the arm's length means is reasonable.
What is arm's length?
As per your supplies, as per market conditions, credit period.
Why use the word arm?
The difference is within the size of-
Not like that one. Actually, it is a funny example. Whenever a new person has been approached, we will give shake hand. How are you? Okay. We will maintain a distance. There is an arm's length. You, me. Whereas if you are a relative, oh, how are you? No arm's length here. Hence is what arm's length means. What even though you are relative, with reference to my business, okay, I am maintaining. So that here, so with reference to market rate, whether the transactions have been entered on reasonable basis. The meaning is as per. But the why the word arm's length is raised is like that. So you are maintaining distance with reference to your business. Are you maintaining the minimum gross profit? Okay, just because you are close relative, are you sacrificing anything in the prejudicial to the interest of the company? Actually, thus the transaction entered is reasonable and not prejudicial to the interest of the company. And this is one most important, subsequent events. In our accounting standard, we have one what? Events occurring after the balance sheet date. Those events that are occurred after balance sheet date but before approval of the management. The same concept, subsequent events. Events occurred after the balance sheet date but before our audit report. Same, these are two types. There we used the word adjusting, non-adjusting. Adjusting event means what? Those events that provide evidence relating to conditions existed as on the date of balance sheet. That means what? Even the event occurred after the March 31st, come on, this is significant, adjust retrospectively. Adjust to the finance because not approved by the management, come on, adjust retrospectively. Whereas non-adjusting event, no need to adjust retrospectively, but a disclosure has to be made. That is accounting standard. The same in our audit standard is what? We use it instead of adjusting, non-adjusting. Here we are using the word type 1 events, type 2 events. Type 1 events is adjusting. If as an auditor I identify it is a type 1 event. Take a simple example. March 25th already management decided to revise the salaries of employees with a retrospective effect. Some additional, some 100 crores etc. going to be paid in the form of salary. Decision taken in the March 25th, but actually they paid April 1st, let us event occurred after the balance sheet date. But since the conditions are existed as on the date of balance sheet, because everyone knows that once they decide, okay, they are going to be able to payment may be made in the subsequent. Hence is what even though event occurred after the balance sheet date, come on, you whatever the provision should be created as on the 31st March. On the other hand, on April 1st only, some fire accident occurred, some loss happened, no insurance coverage. Does it require to adjust to the balance sheet date? No. But in the coming days, AGM is there. We have to be informed. Some major fire accident, etc., etc. Hence, our disclosure is required. No need to adjust in the financials, but a disclosure is required. So, type 1, type 2 events. Only difference, accounting standard, auditing standard is what? Accounting standard event occurred after balance sheet date before the management approval. Here, subsequent event is before the, after the balance sheet date, but before our audit report date. Now, I will ask one important question. Let us assume it is adjusting or non-adjusting or important event. You identify. What is our next step? We will bring to the notice of management why you are not adjusted. If management adjusted, happy. Not adjusted, once again evaluate material, not material. If it is material, will qualify the report. Not material, this we will also ignore. Now, please listen carefully. Subsequent event is event occurred after balance sheet date before audit report. Today morning I signed the audit report given. AGM is July 1st. They decided. Today I signed the audit report. After 2 days, some event occurred. Very significant. What to do? Sir, can we revise the audit report? Nowadays, now we require to use the UDIN also. In the UDIN already you mentioned it is a, now they are asking it is a modified, unmodified, etc. also. Already you given unmodified report. Now this event requiring modified. Can you change? Can you revise? Cancellation is also not possible. Today gone.
Not possible.
Document data.
Management will not agree. You already given. How you cannot revoke now. You cannot cancel. You understand?
A special revise second modified revise report you will given, sir.
Don't understand, sir. Here management is refused. You already given report in the 2 days before. Come on. You will say
It's accepted.
goodbye. Come next March only. They said. If they refuse, what you will do? The 2 points are there. Please understand here. Interesting. What subsequent event is said. First one. If management agreed,
No problem.
what you will do?
What
That
will
is
you
also fine.
This report will include in the AGM, sir. The revised report. Management accept.
You cannot change the report, sir. Once we given audit report, PM said our signature is more powerful than his signature. Once we sign. Once you given report.
AGM will
Then,
discuss.
no. What he is saying that after to the same audit report, don't change, any changes will not be made. By putting another date, we will express another open. Let us assume whether it is some event occurred or some fire accident occurred, whatever your opinion you want to share, that we will put another date and we will, as like an addition, we will mention. You know it very well, our audit report has to be dated. Now there are 2 dates in our same audit report. That type of reporting is known as what? A dual date report. Because it is a subsequent event occurred after the audit report, which is significant one, management accepted. Hence by putting another date, we will express the opinion. Like putting 2 dates on the same audit report is known as what? Dual date.
It will also be published.
No, that will. Whereas if the management is refused, nothing is mentioned by our standard simply saying that obtain legal advice.
This document, keep document.
Just only document. Because directly they are saying that come on, you report in the next day. Because what institute is directly saying that obtain legal advice. So that which legal advisor will do advise on this particular matter, I don't know. Okay.
subsequent events means up to the date of the.
No, please understand here. You can generate the union all these for secondary one. When management is cooperated, management is not cooperated, then only all these questions will come.
మేనేజ్మెంట్ యాక్సెప్ట్ చేయకపోయినా మనం సెకండ్ రిపోర్ట్ జనరేట్ చేసి వాళ్ళకి మెయిల్ పెట్టి కమ్యూనికేషన్స్ డాక్యుమెంట్ చేస్తాం. దాంట్లో యూడిఎంఏ ఇయ్యాలా లేదా లేదా
That's all I am saying. Generally, once we given report, that is final. Okay. Only our standard is saying that management agreed, then only due date reporting. Don't change the once report is given. That is first fundamental point. Any addition, due dating. If agreed by management, if not, obtain the legal advice. That is all. Okay. So as you said, this is forceful reporting cannot be possible. Management will take once report given, that only final. Unless we revoke the unit, which is not possible. Now going concern already we discussed morning, whatever our first hour itself. If there is any material uncertainty relating to going concern, management properly disclosed, then there will not be affected if some some funding sources etc. we have certainty is there etc. then you can ignore. Whereas when there is a material uncertainty relating going concern is exist, management disclosure properly, then we may include in our audit report like material uncertainty without quality. Whereas if the management does not disclose, but there is a material uncertainty related to going concern, then we have to quality. Sir, these are all workings on mentioned etc. These many workings we have to, in case of consultation or separate. Actual mandates, audit planning minutes, audit of fraud risk etc. Materiality working paper. Here at this point I want to show you. Generally in materiality working these 3 points is required. Planning materiality, performance materiality, tribal. Planning materiality, performance. In the audit workings in SA 320, we have to be mentioned what is planning materiality, performance materiality, and tribal. Planning materiality means what actually, in respect of one company, I decided to examine all transactions having 10,000 rupees above. I plan to examine transactions worth of 10,000 and above. Let us also simple. That is planning materiality. Then performance materiality must be more than planning materiality. Now even though I planned for 10,000 transactions, but I examine every transaction involving even some, not only 10,000, even 8,000-9,000 also. In other way, I originally planned to examine 70% transaction, but actually I examined 80-85 transaction. Your performance materiality always more than planning. You planned for 70%, but you examined only 50%. Then performance materiality less than planning. Then that is a question. Hence, always you should be planned for some amount, and performance must be more than that. A tribal means what? Very silly item. Less than 1,000 I did not examine. That also will mention any transaction which is less than 1,000 I did not examine. Because I consider it is very tribal with reference to nature and size of that particular company. Is understand? That will be changed from time to purely it is. So that we have to be mentioned what is planning, performance, tribal. Risk assessment. Types of audit report. Unmodified, modified. Unmodified means what? Clean report. As we already discussed, when we are concluded based on evidence obtained that the financial statements are free from material misstatement, and misstatement if any is at acceptably low level, and these are showing true and fair of its state of affairs, then we will give unmodified report as prescribed in the SA 700. Whereas a modified report is two types. That we are modifying the report only, not opinion. Then SA 706 is applicable. Emphasis of matter para, other matter para. Whereas we are changing both opinion, also the report. Then we have to be given SA 705. SA 705. So the SA 705 is when we are modifying the report, also modifying the opinion. Whereas you are changing the report but not opinion, then SA 706 emphasis of matter para or other matter.
Key matter paragraph also 706.
Now, when KM also here same. Now this is most important. When we will issue modified opinion under SA 705, two situations are there. Situation 1. When auditor obtained sufficient appropriate audit evidence. There are no sufficient appropriate. Sufficient means what? Quantum of evidence. Appropriate means what? Relevance. Okay, in a very flat language, both quality and quantity wise. We have sufficient appropriate audit evidence. When you obtain sufficient appropriate audit evidence that the misstatement in financial statement is not free, or there are some misstatement in financial statement, we have evidence. What is that misstatement in financial statement? Is it material and pervasive? Material but not pervasive. Already we discussed under say 450, even though there is a misstatement, but if it is not material, we will do still unmodified only. Whereas it is material but not pervasive. Material and pervasive. Pervasive means what? Spread to all areas. Let us assume it is the company is required to comply with accounting standards. None of the accounting standards have been complied with. First of all, financial statement not prepared as per Schedule 3. And the entries are also made in differently. Current assets as non-current, current, non-current as current, etc. And a majority of accounting standards are applicable. India does not comply with. So that either P&L, balance sheet showing true and fair. Then don't give qualified opinion. We have to give the adverse opinion. Because the misstatement in financial statement is not only material but also pervasive, spread to all areas. Spread to all areas. In such cases, we have to give adverse opinion. Whereas there is a misstatement which is material but not pervasive. Due to various reasons, the huge amount of inventory is there. The inventory value at their cost only, not cost or another whichever is lower. Management refused to correct. It is a material misstatement. Deviation from general accepted accounting standard. But at the same time, remaining all are shown true and fair. So it is a material misstatement but not pervasive. Then we will give qualified. So that when there is a misstatement, we should evaluate is it material and pervasive. Material but not pervasive. If spread to all areas, come on, you have to give adverse. Now one common point in this is we are observing some like bigger frauds, etc. There are material uncertainties are there. Everyone knows. Auditor is not let's qualify the same. And one or 2 points you qualify, once again we will not protect. Because there is a multiple misstatement are there, in multiple areas are there. Don't give the clean report, don't give the qualified report also. Then we are equally guilty, as if like a given unmodified opinion. Then we have to give adverse opinion. Because misstatements are not only material but also pervasive, spread to all areas. Next, morning, our sir has been raised one question. Management confirmations. If management refused to give the send the confirmations. Generally, we consider if management is refused to provide to facilitate confirmations or anything, does not provide any record as we requested. Okay. This nowadays it is fashion. They will do first 3 months reports, then another 3 months. By the time audit is over, after audit remaining 6 months. Like this. This is what we call limitation on the scope of our audit. The moment when they denied, not provided, does not given clarity, all this will come under the definition of limitation on the scope of our audit. Now, what is this limitation? Is the limitation is once again material and pervasive, material and pervasive. The limitation on the scope of our audit is material. If the limitation on the scope of our audit is material and pervasive, like this one, they did not give any information. It is very common nowadays. Even recently, one company did not pay, and creditor approached the NCLT. Okay, insolvency professional appointed. Insolvency professional appointed the auditor. Please audit. Now already client is very distressed because his company went to the liquidation. So that when auditor is asking information, the client what he is saying, now entire my company is taken by RP, resolution profession, you ask him only. But where it is records, etc., nothing he is sharing. Now without the information, all these one, even bank login, tax ID, login IDs, etc., he is not sharing, is not, phone is not complete switched on. What you do? What report you are going to give? We don't have the bank statement, we don't have any login IDs, etc., etc. You have some ledgers, etc., one or two is there. What opinion will express? Here limitation on our scope of audit is what? Not only material but also pervasive. At least in not assets, liabilities, entire everywhere, there is no availability of information. Then we will do disclaimer of opinion. There is a limitation on the scope of audit which is both material and pervasive. No records are available of what opinion I can express. Unable to express any. Disclaimer means what? I am unable to express any opinion. That's it. Yes, sometimes you have to do disclaimer like this one. Sometimes intentional client will say, no, yesterday we are digitalized entire transaction, but that my system was crashed. Okay, there is no backup. What to do? No physical records. Once digitalized, we burn out all our physical records, nothing is available. What opinion we can express? Simple disclaimer. Whereas if the limitation on the scope of audit is material but not pervasive, once again. All records are available except some stock records, etc. is also not available, but we believe that is also very significant. Material but not pervasive. Then once again we will do quantify.
So how to quantify? So some stock records are not available. So for qualify, we must quantify also.
Which one?
Suppose stock
Ah.
records are not available.
Ah.
But,
Generally, what here quantify means what? Wherever quantify means 2 points are there. When you are quantifying the same, other alternate procedures such as what? Previous audited figures. Reasonable comparison will make. Last year, this year, general how much is there? Last 4 years stock is around 100 crores. Obviously, this year also we will expect more or less similar. Okay, so that alternate audit procedure with reference to other sales, purchases, transaction. Even in the bank transaction, how much sales have been made, how much purchases are there, vendor transaction. With reference to that one, we can make some rough estimation. But that rough estimation based on that one, we cannot finalize the financials. But however, we can come to one profit.
But even though disclaimer opinion, adverse opinion, we must assign the financial statements.
Yes.
So sign it and
Sign. In all the cases, we will sign adverse qualified UD number as well common. Now this only they are giving now in our UD. Earlier is not there. Now they are giving. First only modified or unmodified. Okay. Unmodified, no problem. The moment you said modified, even now unmodified also they are asking. Did you include it? Emphasis of matter para, other matter para. This is actually good thing. Reason is what? Tomorrow anything cannot be removed.
yes.
Clearly, UDIN is one important element that we can, yes, have qualified the report, come and see my UDIN number also. So that, know the recent whatever the application. So that,
Yes, when we apply the same procedure to the bank IDs also.
same, same.
The branch manager does not provide any information.
Information, okay, if you consider it is a material, okay, material purvey disclaimer, material but not purvey qualified. General one, branch manager nowadays, in their, whatever the vernacular, whatever system maximum available,
Of course.
but still,
Some managers are there, sir.
be there. Not some so much of information. Say.
సార్ ముందు డిస్క్లైమర్ ఆఫ్ ఒపీనియన్ ఇచ్చి తర్వాత మళ్ళీ మోడిఫైడ్ ఒపీనియన్ క్వాలిఫైడ్ ఒపీనియన్ వచ్చా
అంటే సిచ్యువేషన్
ఎన్సెట్లో వర్క్ చేస్తున్నాను సార్ నేను ఎన్సెట్లో వర్క్ చేస్తున్నాను వాళ్ళు ఏంటంటే సెక్షన్ 10 పిటిషన్ వేసి వాళ్ళ ఆడిట్ రిపోర్ట్స్ అనేవి డిస్క్లైమర్ ఆఫ్ ఒపీనియన్ కింద సబ్మిట్ చేశారు సో ఫర్దర్గా వాళ్ళు మళ్ళీ కరెక్ట్ డాక్యుమెంట్స్ ప్రొవైడ్ చేయమంటే సో మళ్ళీ సేమ్ చార్టెడ్ అకౌంటెంట్తో అన్క్వాలిఫైడ్ ఒపీనియన్ని చేశారు కాకపోతే వాళ్ళకి నోట్ పెట్టారు ట్రేడ్ పేపర్స్ మాత్రం మేము ఆడిట్ చేయలేదు రిమైనింగ్ అన్నింటిలో అన్క్వాలిఫైడ్ అని
That's all I am saying. Cancelling the old report, audit report is actually not possible. But it is a mutual understanding. Mutual understanding is also, I cannot endorse that one. Generally, client is not saying and auditor is also accepting and generating. But please pay attention here. Tomorrow, one of the important element of our peer review is what? In the peer review, what we are doing? They are giving complete list of UDIs.
Yes, sir.
Why? They are not asking any information, mainly complete list of UDIs. Even the peer review board, the moment they received the form 1, they did not verify anything. They only tally this one.
Yes, yes.
First point.
First point.
Okay,
Very good.
because they have the record. Okay, in form in 3 years how much you are generated UDIs. Okay, if tallied then only, otherwise first query will be sent. Come on. One complete specified format will be there, complete list of UDIs, etc. in the so and so, like this will be. So the indication itself is what we are not misusing. In fact, with reference to UDIs, we have one code of ethics also.
Yes, sir.
Okay, generally once we are given report, we have to stick to that one. Unless you revoke within the 2 days. If you are giving subsequently, that is actually very much, there are so many cases is also there. On the same financials, giving 2 opinions is guilty of professional misconduct. This is held in this one case.
But in case of public sector bids, the state agency comments so many committees. Based on that, auditors are revising the audit reports and subsequent date and mentioning the original audit report is what is the basis for the changes of the my report, then mentioning the reasons. Revised audit report, based on revised audit report, same agency
Okay, in that case, I will tell you. The auditor performed, CNAG subsequently performed, and identified, produced some additional evidence relating to the situation. Here, that is with reference to our audit, opinion is simple, but CNAG is appointing authority and regulating authority. Since they made a comments and they are permitted indirectly, hence we are doing. But as per our standards, nowhere it is, once you are given report, second time you can revise like this one, is not there. Only in case of tax audit, only tax audit report can be revised subject to conditions. But nowhere in the statutory audit report you can revise subject to conditions, nowhere it is mentioned. Okay? Can, now means what? Practice is going on, but I cannot say it is standard. Okay? Within my knowledge, nowhere I observed in the standard that you can revise the statutory audit report. Tax audit report, okay, 3 conditions are there, you can revise, whatever. Okay, I hope that these are there, mainly emphasis matter para, other matter para, this one.
Even disclaimer opinion, that means we are any further cards or any other something is happening. We are free
Sir?
from negligence. Giving a disclaimer opinion. Based on the data of some other matters, expressing the disclaimer opinion. So subsequent in the particular financial year, some frauds or some illegal acts, something is found by some other external agencies.
When you are given disclaimer of opinion, then we are not we are completely what are immune. I am unable to express any opinion. What you can do? Nothing. They cannot say.
Yes, yes.
Okay. Then it is 100% we are throwing responsibility on management. Management does not give a complete limitation on scope. So right. In fact, in case of listed company, when you given the disclaimer of opinion, key audit matter para also should not be there. That should be removed.
Because there is no
Key
information.
audit matter parameters were during the course of my audit, a significant audit adjustment. What to audit? I did not audit it. Then why KA? And this is what when you given disclaimer of opinion under SA 705, that word, the moment that should not get paid. So that we are completely immune. I am not audited. What report I can give? I think you have this one. Just go through. I think make a quick review. Sir, please, okay, we go first page. You can see. Risk assessment, materiality, and those are with the communication. Okay, we will do one thing. Please come to case 3. Case number 3. Because it is based on going concern, MURGC, material uncertainty relating to going concern, MURGC, EOM, KAM, qualification, disclaimer and advance opinion. Okay, case study 3. I think after 20-year question, you are now see here different 3 situations. Chaitanya Infrastructure Limited has incurred losses during the current year and has negative operating cash flows. However, the company has received a binding support letter from its holding company and has a sanctioned but undrawn bank facilities. Management has disclosed its funding plan in the financial statement. So that as we just now discussed here, uncertainty is there, but they have proper funding plan, proper disclosure is made. Second situation, in another situation involving some Deepa Textiles Limited, the company has a severe liquidity stress. Debt repayment are overdue and operations are dependent on successful restructuring with lenders. Management has made adequate disclosure of these material uncertainty in the financial statement. Please understand, here no funding plan, no way out. But management made proper disclosures. Okay, so that you can now observe in first of these 2 questions, situations, no need of qualification. First one, no need of even, no need to disclose even EOM also, because everything is there good. They disclose. Second one is what, even though everything is good, they disclose it. Since uncertainty is there, better to disclose in our EOM. Third one, in a third situation involving Ishwar equipment, etc., the company has a severe losses, bank defaults, and inability to pay suppliers. Management has prepared the financials on going concern basis, but has not disclosed the material uncertainty. Hence is what now we have to be qualified. Now, based on this one, now you can easily answer the questions. Just one or two, let us see. In the case of Chaitanya Infrastructure means what? First one, where the losses existed but inadequate, but adequate funding plan is disclosed and supported. The item may generally issue. First one only, unmodified opinion if going concern basis appropriate and disclosures are adequate. No need of BCD. Only first one is correct. Second, 22. Losses alone automatically require which of the following? Is disclaimer, adverse, etc.? No. Auditor evaluate of going concern but not automate modification. So C is the correct. Third one, in the case of Deepa Textile is what? They have second case. That means what?